So, good morning, everyone. Namaskaram to each and everyone. Shiva, good morning. Um, Shiva is one of our participants, just in case you thought that I was calling the Almighty Shiva. Um, yes, good morning, because generally we take our weekend session on an evening, Saturday evening. But this Saturday, we are taking it daytime, in the morning. It's 10 o'clock, and first, as always, we will first take a look at the Nifty, BankNifty, and the rest of the sectoral indices. So I have a two time frame over here, the weekly and the daily, and the new way of looking at the charts, which gives us a much more enhanced understanding with the bar and the Heiken Ashi together. So first take a look at the weekly, and what I will do is I will blow out the weekly so that it's just one chart at a time so that there's more clarity. And what does the weekly tell you? Nothing much. If I zoom in, we had a bit of a consolidation, which is very obvious and likely because the week before that was a big sell-off week. So if the market has sold off and the market has some value interest, shouldn't it have bounced back? Now, will you call this a bounce back? It's a trivial, small little bounce back. When I generally see a pretty relatively large bar, be it positive or negative, I always like to keep an eye on the 50% mark of that bar. That did the market manage to even cross halfway of last week's sell-off? And the answer is no. And if that answer is no, it means it's buying time. It's not willing to travel. So if you're not willing to travel, it means you're consolidating, you're slowing down. So are you slowing down and waiting for a continuation of the previous week's sell-off? Or are you slowing down and buying some time for the bounce back? This only time will tell us. But by the look of the trend, by the look of the sell-off and the consolidation, and if you track the markets even during market hours, throughout the week, you would have sensed that the bullish sentiment is lacking. Whenever there's a burst of a little bit of a buying, selling creeps in. So it seems, it feels, and it seems, it looks also that this market probably wants to slow down further. However, having said that, the weekly chart is all gunned up with a lot of, let's say, levels. It's got a pretty wide consolidation, congestion in the past, which we had marked 22,500 to 23,800. That's a big wide range. We've got a couple of anchored VWAPs lying there, and we will see, we will observe, we will keep a very close look if we get a break below 23,600, and if market enters this zone, how will it behave? Will it just, cut through a hot knife through butter? Will it see some volatile times and some consolidations and bounce back? It'll be interesting once the market enters that zone. So weekly charts not looking that good. Now, before I go to the daily chart, I'll take a look at our trend, momentum indicators, our Heiken behavior. All are suggestive of weakness. So weekly charts are weak. So not getting any bullish view from the weekly time frame of the Nifty. The daily time of the Nifty, if you remember, we had drawn these couple of levels. It seems that the market has supported, or should I say has found a resistance from the first zone. And it's not even able to, manage a close above the short-term EMA. My short-term EMA is a 5 EMA. So all throughout this last, I would say 7-8 trading sessions, it's not even managing to cross that 5 EMA. It's a sign of weakness. We've seen the market slipping from intraday highs, particularly this week. I have this beautiful fib combination which held the market in the past. It will be obviously interesting to see, do we get a retest of that or not? When I ask my momentum indicators, no problem, it's all weak. So momentum indicator is very much supportive on the downside. Heiken is just buying some time. Heiken is just buying some time for the last 3 days, which is a slowdown after the fall. So it all seems, as of now, it seems, feels, it looks like the market has consolidated the previous week's sell-off. We have not seen any particular huge bounce back from any of the sectors or any of the large caps, and it doesn't give you a good feeling even when you add the, let's say, the macroeconomic parameters, which are, most of them are kind of slowing down. So I would strongly suggest not to get too excited and aggressive because the markets are relatively cheap and you would like to buy. Even if you do that, do it in a very staggered manner. Break it down in 4 or 5 smaller parts and just start nibbling, which is more like accumulating. But I think the market is heading further down. That's the Nifty. Now what we'll do is we'll take a look at the broader markets and of course the rest of the sectors. The broader markets, I'll break it down into 2 parts. It will be easier to take a look at the weekly as well as the daily time frame together. This is the CNX 500, which essentially mimics the behavior of the Nifty, so it still stays weak. Now the mid cap and the small cap, if you remember, especially the small cap, if you remember, recently had given a phenomenal run up, and if I'm not mistaken, it was one pocket which hit life high. And if you're not able to understand what I'm saying, it's this bounce back. In this bounce back, when the Nifty could barely retrace 50% of the previous 12% sell-off, the small cap index had gone to an all-time high once the chart opens up. TradingView has this uncanny, I don't know whether it's a habit or not. Yeah, there you go. Takes a little bit of time at times to pop up. So there you go. What I was saying was the small cap had hit a life high. So definitely a pocket of strength, and we have seen that broader markets outperforming the large caps. I do not see it in a very positive note that the small caps and the mid caps continue to outperform the large caps for a significant span of time. But I think by the look of the daily chart, the small caps are all ready for a dip down if that happens. It's going to be very interesting. The daily charts are weakening, the weekly charts are taking a breather after the fall. So are we going to see a move which is like 1, 2 and then pick up on the upside, or are we going to see a consolidation breakout? It's a broadening formation on the weekly chart, so stay away from breakout trades. When it comes to small caps, if you found a small cap stock or a mid cap stock, I would strongly suggest to stay away trading breakouts in this market environment. Now let's take a look at the most important sectors, starting off with the Bank Nifty. Now Bank Nifty weekly chart, you can see what it has been doing over the last few months. It's got a pretty decent range here. Again, the similar kind of a bar formation. Last week's huge sell-off, and after that the next week consolidates. See, when the market or when any chart you read and you see visually, you see that it's gone range bound, right, oscillating. In that kind of a situation, looking at the trend indicators and even the momentum indicators will not fetch you any strong analytical views, because it's just oscillating. Uptrend, downtrend, momentum positive, negative, positive, again down. So it doesn't lead you to any strong high conviction view to establish. The ideal thing to do, which sounds little lagging, is essentially wait for such a chart to give you a directional breakout. That you come out of this zone and create a directional clarity for yourself. Now this is a weekly chart, so we're talking about directional clarity from a medium term to long term perspective. If you talk from a short term perspective, looking at the Bank Nifty daily chart, things are not looking that good. We've got a small little gap down to deal with, which is close to that 52k. That's where your resistances are. And of course, you have the previous lows which can come and retest. Very interesting. We will see that after this, the behavior of PSU banks and the private sector banks. So let's say if we expect the Bank Nifty to break down this and come down towards let's say 49,800, 49,600 levels. If we expect this breakdown, then which are the stocks or which is the pocket of the Bank Nifty stocks which will bring this index down? I always suggest this, that whenever you're finished analyzing, creating a view from any sector, in this case Bank Nifty, always take a look at the Nifty Private Bank and the Nifty PSU Banking Index. So when I take a look at the private bank, of course, it looks very, very similar because the private banks like HDFC, ICICI, Kotak and Axis, these are the 4 stocks which enjoys the maximum weightage. So private banking index will be very similar to that of the Bank Nifty most of the time. So we get a similar view that, okay, not looking that good. It is bouncing back. What we like to call this setup, if you remember, is a thunder short setup. And looks like, yes, there can be a bit of selling coming in from the private sector back. Now, I will not miss this opportunity to mark these fractal highs. And they have in the past have touched as fractal lows also. Lows and highs when they come close to each other. That's the concept called polarity, right? So something like this, which the Bank Nifty also needs to deal with. I would take a couple of seconds from you and mark this blue because I like to mark supports in a blue or a green color so that visually I know it's essentially a support at the current market juncture. Now, what about the CNX PSU Banking Index? The CNX PSU Banking Index has been an underperformer for quite some time, if you remember, right? This is where your PNB, Bank of Baroda, SBI were underperforming. We had a sharp rally recently. This was predominantly led by SBI. But if I take a look at the daily chart as well as the weekly chart, and especially if I zoom in and realize what's the close of the weekly chart for the CNX PSU Banking, it's not good. Almost at the lowest point of the week. It's not even given us a positive bar, which many sectoral indices have managed. So it has been a pocket of weakness. We saw that in yesterday's trade also, you noticed. So keep an eye on PSU banking stocks if you are a derivatives trader and you're looking to create any kind of a bearish strategy there. Private as well as PSU, but relatively PSU is weaker than that of the private. Now, before I move on to the rest of the sectors, this particular analysis that we did with the Bank Nifty clubbed with private and PSU is not a good sign, because if the Bank Nifty gives us another 3, 4, 5% correction, of course it will drag the Nifty down. So we know that the finance and the banking enjoys maximum weightage, followed by IT. So this pocket is looking weak alongside the weakness in Nifty. It's not a stage where, okay, Nifty is looking weak, but the Bank Nifty is looking strong. No, Bank Nifty is looking weak alongside Nifty. So it kind of merges. So the sell-off or the weakness is very evident. It's become very evident. The next most important sector is IT. Let's take a look at IT. Now, of course, IT, thanks to the dollar index, is a much better looking chart than the rest. You will agree with me. The trend is positive. The momentum indicator at our end, however, is slowing down. We had a 2-week correction. The daily charts have turned down. The short-term charts, the short-term trend has turned down. And yes, if it breaks down, we can see some further weakness. I was taking a look at something like an Infosys and a Tech Mahindra, which can do that. But you never know, because this is structurally a strong chart. So one should not expect significant downsides even if it comes down. Say you expect IT to come down, say you go for a short trade, do not expect significant downsides. If you're looking to short, I would suggest short weakness rather than shorting strength. This is generally a strong sector. So I would not suggest to short unless you're a very short-term intraday kind of a trader. So wait for it to settle, but it is weakening. Now let's take a look at auto. Now auto is under some serious pressure when it comes to quarter-on-quarter sales and all those numbers. And when it comes to price behavior, yes, it is struggling. If we zoom into the weekly chart, we do see that there is a bit of a range-bound activity for a few weeks now after this leg down. So it's buying time, and throughout that, trend and momentum has been down. It has given us a bounce back last week. We did see that yesterday, Friday's trade. We did see how Bajaj Auto, M&M, all of those stocks did fairly okay. But it's not enough, if you ask me. It's not really enough from the weekly charts point of view. Any kind of a breakdown below this will definitely open up fresh grounds on the downside. You need to be really careful what kind of stocks you're picking. If you ask me, Is it a good time to buy? Now, long-term charts, monthly, quarterly charts will be phenomenal, will be very, very good. And they're going through a much needed correction. Valuations should kick in. Valuations should be attractive enough for the institutions to start buying. The indicators are not that great. The markers when it comes to sales and all those things are not that great. So to take a contrarian view on the CNX Auto, to take a contra view on Tata Motors and stocks like Bajaj Auto, I will suggest take some time. Don't be in a hurry. At least wait for the hikens to improve. So stay away from auto if you're a long only trader at this juncture. CNX Energy. Now this is where your Reliance ONGC, your oil marketing companies, etc. comes into. Not a good weekly close. Again, hardly managing a bounce back, slipping towards the end. Complete 4 days. Last week we had a holiday, a market holiday on the 25th of December. So the 4 bars, you can see barely any interest whatsoever. Of course, the FIIs are on a break. So volume wise, nothing much happening. We can understand that. And so when you see a consolidation with the trends and momentum staying down, your view should be bearish. So yes, it is bearish. But if you go short on these, in this sector particularly, you need to be a little careful because I can see a bit of a momentum slowdown or divergence kicking in. So possible that this sector can also give you another leg, short-term leg on the downside, CNX Energy. We have not seen any strength as of now except the IT pack. Finance generally mimics the Bank Nifty. Now coming to FMCG and consumer durables. I'll take a look at that back to back. FMCG is one sector which fell first, and of course it fell pretty sharp. Take a look at stocks like Tata Consumer Durables, Dabur, Kolpal. You'll not like it, the look of it, the look of the way it fell. Now, is it forming a double bottomish formation? Looks like that. I cannot confirm that right now. It's been bouncing off from the same lows. So 1 and 2. However, if you know these patterns, you have to wait for the pattern to conclude, which means you need this breakout. Once you have this breakout, you have a double bottom, you have a prospective target, etc., etc. Are there any other signs which tells us that yes, the CNX FMCG is ready to bounce back? On this chart right now, if I ask trend and momentum indicators, sadly no. If I ask Heiken-Ashi, sadly no. If I ask the RSI short term, it's forming a bit of a divergence, which is telling me the selling is slowing down. Slowing down does not necessarily mean that the buying will emerge. Let the buying emerge. Let any stock, like especially like an ITC, show some strength. Then only can we confirm, yes, this guy can bounce back. Till then, it's not a great idea. If I take a look at the daily charts, yes, there's a slant divergence shaping up on the daily time frame, which is forming this Adam and Eve-ish kind of a double bottom. Ho sakta hai, it's possible. Too early to confirm. ITC is one stock which structurally looks the best from this pack. IT we have discussed. After FMCG, I generally like to tag along with the consumer durables also. Now this is not a bad chart when it comes to the weekly time frame. This chart also bounced back pretty well with the small caps, the IT, etc., etc. So the weekly charts are not bad. The daily charts are weakening. You can get this breakdown if the overall markets breaks the current lows. Of course, it will drag most of it with itself. So keep an eye on Titan, Havells, and stocks like that. You have to be selectively bearish here. But if it doesn't fall, if this range holds, and if you get a move beyond, let's say 42,100, then you can look for pockets of strength, right? Because you have the support of the weekly chart. So consumer durables and IT, they have a decent weekly chart in relation to the rest. What are we left with? Pharma and realty. Now pharma will give you the best looking behavior when it comes to the daily chart. This is where Dr. Reddy led the move. Sun Pharma is picking up. DV is also trying to bounce back. But it was all led by Dr. Reddy. Weekly chart, trend-wise okay. Momentum is just improving. And it is possible that it stays within a range like this for some time. possible, because when we see the trend and the momentum not in sync, we tend to see such range bound activity. Daily, very good. Daily, we had spoken about Sun Pharma at length for the last, I think, 3, 4, 5 days now, and it finally gave you that move. It needs to deal with this polarity. So you will see the similar kind of a thing on a chart like Sun Pharma as well. You have to be selectively bullish here. You can keep an eye on the rest, but short-term trade, I think, would be better over here. Not an intermediate or a long-term kind of a view is not playing out. So selective buying, if you look for pharma, a bit of consumer durables, if it does not fall, if it reverses, and same with IT. And finally, the reality. So the reality also is one index on the weekly time frame where we have a trend momentum sync. We have a pullback bar, which is quite a longish one, and a bit of a consolidation. This makes life a little difficult. Why? Because there are signs of bullishness, but if I want to take a trade, if I want to, decide upon a level beyond which I want to buy, it's very difficult to buy above last week's high, because last week is essentially a no week. It's not created any kind of a clarity when it comes to the direction. Clearly, if you look at the weekly chart, clearly it tells you that, listen, this is the breakout level. This is where a couple of times, in fact 2-3 times, the index has shown us resistance. So if you're looking for fresh strength, fresh bout of buying, let's say breakout, that's the level. This is the level. Now this level is higher, significantly higher from where we have closed. So though my view is bullish, I will hesitate to take an action right now. I should wait for that breakout, looking at the weekly chart. Looking at the daily chart, it has just started to look at the same thing. Most of the charts are giving us the same sense. Last week was nothing but a small range bound narrow consolidation after a little bit of weakness. So all that we have to do next week, honestly, is you take a look at how Monday market opens and Tuesday, whether you get this breakdown or it just gives you a breakout on the upside. Taking a look at the overall market sentiment, I think the global markets also yesterday closed down. Things are not looking that good for Indian markets early next week. I don't know whether it's a good thing or a bad thing. The FIIs are not there, most of them. So I'm not expecting a huge move, either positive or negative. But once we step to the new year, and your new year is on Wednesday, so 1st, 2nd, 3rd जाने दीजिए, let it go. 4th, 5th, so the week starting 6th of Jan. The week starting 6th of Jan is if my calculation is correct. That week can be an interesting one, because I think I'm expecting the normal market volumes activity to kick in from that particular week. Let's see what happens, right? So that's the sectoral analysis, like always. Now I'll take a look at your questions and doubts.